the slump that we've seen in the auto pack after the numbers came in the month of March. It was the lowest in the last 5 years. But from there on, the sector had staged a remarkable turnaround over the last 20 days, so to say. At least if you look at the Nifty Auto Index starting March 25th, the auto index has gained close to almost 10% since then, and a lot of stocks have been moving around. You call it Tata Motors have staged a very good recovery. In fact, you've also got stocks like Maruti, which did slip below that mark of 7,000 as well. So let's get a better view on this one, and let's get going. We've got Mitul Shah, who joins us from Reliance Industries. Hi Mitul, good afternoon, and thanks a lot for joining us today on Bloomberg Quint. First, a question: what do you think has been the sole reason that we've seen the recovery in terms of stock prices? I don't know how the sentiment is, because there were a lot of reports floating around after the numbers for the month of March came by. The recent from FADA saying the inventory levels, at least for the two-wheelers, have come straight from 100 to 50 days. I don't know how true is that, but what according to you is aiding the stock prices?
The stock prices corrected largely in last 3-4 months to greater extent, and in few cases stock prices corrected much beyond the fair valuation. So on the other hand, as FADA has indicated, there is an improvement in terms of the pickup in the retail demand. Moreover, inventories also corrected sizably for two-wheeler passenger vehicle. Already commercial vehicles inventory were under control. So broadly, majority of the segments as per the FADA inventory level is under control, and on the other hand, retail demands are picking up. So these 3-4 factors started driving the stock performance in recent time.
All right. Let's talk a little bit more about what you anticipate the next few months to bring along. I mean, we're talking about a monsoon, a normal monsoon, and that in turn having its impact within the CV space for tractor makers. How does all of that play out, and do you see the incrementally being positive, and whether or not entry points are viable at these levels?
As you pointed rightly, monsoon is a very important parameter, because since past 4-5 years, majority of the volume growth is coming primarily from the rural India. And last year monsoon was 5% below, but in few territories like south and western regions, monsoon deficit was to the tune of more than 20%. So this has impacted the agri output as well as rural economy to some extent in past 6 months, which transform into lower volume growth and subdued volumes in the rural India. So if 2019 monsoon is normal, there would be an improvement in the sales across India, but particularly few regions which are big market for the two-wheelers and passenger vehicles like southern and western portion, that will bounce back more strongly. So this can result into volume improvement in the second half of the fiscal.
I want to come to you specifically on Tata Motors, but before that, we've been talking about, the story of how the stock has actually recovered from levels of about 150 that it touched post its Q3 numbers. The recovery has been stellar, and if you pitch it against what the auto index has done as a whole, there is a big gap in the outperformance posted by Tata Motors vis-a-vis the auto index. Is everything, whatever wrong had to happen with Tata Motors, most analysts seem to be believing that it happened in Q3 when they actually posted their numbers and took in that big blow. Is it improving? Do you think the on-run situation probably has taken a turn for the better for Tata Motors now?
Tata Motor, despite being a auto company, there is a direct disconnect between the Tata Motors and other automobile companies, as JLR is the main key force and which is a global luxury car segment. So we cannot compare its performance with any of the other Indian auto companies. Here 3-4 factors which were going negative which started improving in last 1 or 2 months, which resulted into stock price upward movements. One is a Brexit got delayed already, which was a key overhang. On the other side, there is some improvement seen in the China volume as well as Western Europe and UK also started improving to some extent. But these also transform into improvement in the JLR business. But in addition to this, company has highlighted strong improvement in its Q4 result in one of its press release related to JLR clarification, wherein they also stated significant improvement in cash flow during the fourth quarter. So these transform into positive sentiment for the stock, and stock started reacting very positively. However, we need to be watchful on sustainability of the performance, even if Q4 will improve in terms of cash flow or profitability, whether it is sustainable going forward. Because on the other hand, number of other challenges in terms of technology wise developments, R&D expenses, capex, technology expenses related to electric vehicles, all those things are highly big challenging for the company, and from that point of view we would like to see company's performance in coming 2-3 quarters. Then only will become in direction wise positive on the stock. Right now we believe that still the volumes not improved, and overall performance of the JLR is still under pressure in terms of the cash flow as well as margin, so we would maintain our negative view on the stock.
Financial performance, we yet have to see that for Tata Motors, but in terms of stock price, 129 was the level it touched on 8th of February, and from thereabouts now it's trading somewhere about levels of 230. Mitul, first of all, apologies for my intro. He's from Reliance Securities. My last question to you is, which is your top pick? You've already mentioned you don't like Tata Motors, but your top pick in the auto pack right now?
Right now we are more positive on the passenger vehicle segment. Within this we prefer Maruti Suzuki. Maruti Suzuki still remains our top preference within auto space. Key reason behind this, we believe that Maruti would be a game changing situation in the Q3 Q4 when the BS6 will be implemented, and Maruti would be much ahead in terms of the technology for BS6 as well as the cost increase. Maruti's cost increase will believe that would be the least in the industry. So when the Q4 will start and everybody will be ready with the BS6, Maruti probably will gain sizable market share from the others, and also it will regain lost pricing power to some extent. So this will transform into higher profitability for the company going forward, and Maruti will again start trading at premium valuation.
Okay, got that. That's Maruti that Mitul likes. Remember, 3 occasions, October when it made those lows of about 6,200 or 6,300 odd, from there Feb, from there April. 3 occasions where you've seen the stock take support closer to 6,400, 6,300 from where it's bounced back up, but it's faced a hurdle back at these levels of 7,300s. From a technical perspective, we'll try and get an opinion, but Mitul, we would like to thank you here for joining in with your perspective on the auto space.